We're talking with Brian Hoops, and he is with Midwest Market Solutions out of Springfield, Missouri. And we're talking about our ag commodity trade. Wanted to bring up a couple of things related to railroad outages, and we pointed this up earlier in the broadcast here, but I wanted to show these to you once again. We kind of zoomed in on these maps for you a little bit to show you the outages on the Burlington Northern Santa Fe rail lines and also on the Union Pacific lines. They have been showing up with outages in eastern Nebraska, and in some cases they go down to Kansas City. In one case, let's see, I believe on Union Pacific, the outages go all the way to Jefferson City, Missouri. And that is really preventing grain traffic on the rail lines, preventing supplies from moving out there. Just wondered from your perspective where you're located there. I know you're south of that area, but have you heard of a lot of issues? Because I know the crest on the Missouri River is now between Kansas City and St. Louis.
Yeah, you know, there's a lot of areas that are certainly being affected. A lot of transportation issues, not only rail, but shipping, and a lot of farmers having a tough time getting, for one, getting to their bins and emptying it out because of poor roads that are on gravel type roads or their farm lanes, but then also getting to their unloading location, whatever that is, ethanol plant or fertilizer. It's just been a very, very difficult year. The basis levels had narrowed up in some areas and widened in others, all reflective of the demand and their ability to export the crop once they get it to purchase from a farmer. So it's just a really challenging spring so far.
On the corn and soybeans, they're not getting much traction today ahead of the USDA reports coming up later on this week. But on the corn right now, you have that May contract down 3/4 at $3.79. It's gotten really quiet here. December down a half cent at 4.01 1/4. In the soybean trade, here you have the nearby May contract on the soybeans. If we can roll over there to the soybeans, they have been trading about 4 lower at 9.02 1/2, and we have November down 3 at 9.36 3/4. Chicago wheat, kind of all by itself, has been trading higher today. Right now, you have the May contract 4.5 higher at 4.74 per bushel. And July is 3 1/4 higher at 4.78 1/4. Kansas City wheat, now on the May contract, is trading a half lower. It's at 4.48 3/4. Now that's kind of intriguing because it had been as high as 4.54 last night. So that's off of that by about a nickel. July now currently down 3/4 at 4.56 3/4. And then you have the Minneapolis wheat. On the other hand, you have the May contract down a couple of pennies at 5.71 1/4, but all the deferreds are a little higher. July up 1/4 cent. Cotton right now, we have the May contract there trading 16 points higher, while December is up 19 at 75.93. Make it 20 points higher now. We'll come back and talk more with Brian Hoops about our livestock trade right after these messages. Let's continue our conversation with Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. I want to turn now to the livestock trade here, Brian, and on the cattle market. Boy, when we came across the finish line yesterday, it really stumbled and collapsed. But now today, things are looking much different. Let's take a look at our live cattle and feeder cattle boards in Chicago with live quotes. Right now on the live cattle first. The nearby contract is April, and it's just 8 cents lower at 127.50. In fact, it has been a little bit higher at times. June now up 17 at 121.30. The August contract a nickel lower. October down 45. If you look at the feeder cattle trade, you so far have the April contract 45 higher at 146.65, and that's 80 cents off our earlier low this morning. The May contract down 7 at 150.63. And then on the lean hogs, now on the lean hogs, you have that nearby April contract 85 higher at 79.50, May just 3 cents higher at 86.78. All the deferreds are just very slightly higher. The cattle market, boy, after that washout that we had late in the day yesterday, I guess producers have to be encouraged that it seems to be holding its own. What was that about with that late sell-off yesterday?
Yeah, interesting chart action yesterday where we gapped lower in the live and feeder cattle following that cattle on feed report. And then after kind of some dust settled, the market started to rally back and went and filled the gaps. We always talk about gaps being filled. They did that all in one day and then sold off as there really was no reason to keep pushing the market higher. So we saw a lot of follow-through selling early in the session this morning. Markets kind of absorbed any additional selling. Now we're at the point where some of these funds who've been entrenched on the long side stepping in and trying to defend their long positions going forward here. So we've absorbed a lot of selling, but open interest levels at these record high levels, there certainly could be more wave of selling at any time.
And of course, we have to keep in mind also that there is another major USDA livestock-related report coming up later on this week, and that will be on Thursday. It will be the quarterly hogs and pigs report. It will come out after the markets close for the day, and then we'll get set for Friday when we get the grain reports at mid-session. Brian, thanks for talking with us and for the updates on everything. Appreciate it, sir. Brian Hoops of Midwest Market Solutions. He's based in Springfield, Missouri.